stabilising. All the indicators point towards that. So how underpriced or undervalued is Europe from an investment point of view?
Well, I think you can tell already from this morning's news that you're looking at all different sectors performing in a different way, and so that we've come back to less of a big macro view of Europe or any region in the world for that matter, and more into kind of the specifics of the stocks and the specifics of the sectors in particular. And the banks this morning obviously told us one story, that the industrials tell us another. However, on a broad sweep in equity markets, MSCI, if you use that as a benchmark, 12 months forward price earnings per share in the US has increased about 150% since 2009, and it's virtually been flatline in Europe. You can see the economic surprises that are being registered by Europe are far in excess of anywhere else in the world, and that doesn't mean the economy is suddenly booming. In fact, it's just about stabilising.
Which is progress, of course.
Yeah.
But having said that, since Draghi's speech last year, the whatever it takes speech, among the top performing assets worldwide, most of them are European, and some of the gains, for example, Spanish and Greek and Italian equities and bonds, have rallied 30, 35, 40, 45%. That's not going to continue, is it?
No, but I think what you're looking at is the scale at which these were priced down during the worst moments of the euro crisis in particular, and we were at a point where there was systemic collapse, and or at least that was being discounted into those securities, certainly into the bond markets, and more indirectly into all the equity markets. We were looking at depression in Europe for decades to come. There was an awful lot of bad news in there, and all you really need to see is the fog lifting a bit, and I think that's all we're seeing really here in Europe.
So if you are buying Europe now, should you be going into equities or bonds?
I think you've got to be very selective across the board, and I think what you're seeing in all financial markets at the moment is a much more discerning view of individual securities rather than broad macro sweeps. So I would say that people would still see the equity universe as the place to go worldwide, and if Europe is cheaper than the United States, then they would be looking in those areas.
And let's finish up on M&A. There was a report out from Deutsche Bank on Friday, said that M&A inflows into Europe so far this year are around $45 billion, and that was before the Perrigo-Elan deal, so they're probably closer to 50 billion, so there's clearly some momentum on that front as well.
Well, again, we saw two deals this week, and there was all sorts of merger mania on first thing Monday morning, and we got a sense that something was happening again. But I think it fits into the same picture. All we're seeing here is a stabilisation, and when the fog lifts, again, you're seeing a lot of bid activity or merger activity potentially that was in the pipeline, which now suddenly can go ahead.